Be Wealthy and Smart, episode 1462.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to ask, is inflation under control? Because on Wednesday, the Federal Reserve came out and decided not to cut interest rates. They gave us a little bit more of a hawkish tone, which meant don't expect interest rate cuts going forward. But is that what the information is showing? The Personal Consumption Expenditures Price Index increased by 2.6% on a year-over-year basis in December, which was 0.2% higher than the November reading and in line with the Dow Jones estimate. As you know, the Fed targets about a 2% annual inflation rate, so at 2.6%, we are a bit above where the Fed wants to be, but not as much as we used to be. And as you'll see, a lot of that extra inflation was coming from the energy sector. Energy jumped 2.7%, and food prices increased just 2% on the month. Durable goods prices, which include items like aircraft, appliances, and electronics, were actually showing deflationary numbers, falling 0.4%. And the reason why that energy number is so important is because that is exactly the area that President Trump has said he wants to drill more and bring prices down. If that happens, that could affect overall inflation numbers in a very positive way. Because if it's energy that is staying stubbornly high, then once the energy number comes down, that should help get overall inflation in line with Fed expectations, which will allow the Fed to cut interest rates. Now, right now, the Federal Reserve's future interest rate cuts have 2 cuts priced in for this year, but nothing is expected to happen at the next Fed meeting. The Fed unanimously voted to hold its key interest rate in a range between 4.25% to 4.5%. After cutting 3 times consecutively, totaling a full percentage point. And the last time we were in line with Fed expectations was back in 2021. So we've been above the 2% range since that time. Fed Governor Michelle Bowman said she expects inflation to decelerate through 2025, but thinks the central bank should stay on hold until there are clear signs that this is happening. She said, there is still more work to be done to bring inflation closer to our 2% goal. I would like to see progress in lowering inflation resume before we make further adjustments to the target range. I do expect that inflation will begin to decline again and that by year end it will be lower than where it now stands. So while inflation seems sticky for the time being, if we get any news that there's more oil drilling happening, I think that could immediately change expectations, and interest rates would start to trend lower in anticipation of that energy inflation number coming down in the future. That's what the market does. It anticipates where things are going. So if it sees a cause for inflation numbers on energy to come down, such as more supply of oil, we will see interest rates move lower, in my opinion. Now, in terms of market performance this year, we're off to a strong start. This is the last day of trading in January, but for the month, the Dow is up 5.55% already, the S&P 500 is up 3.89%, and the Nasdaq is up 3.15%. Now, all 3 indices are positive, which means that the January effect for this month will be positive, unless something strange happens in the middle of the day. But assuming that the market closes up today, we'll have a positive January number. And that means statistically that when January closes on a positive basis, it's more likely to be up for the year. I have mentioned that this is the 5th year of the decennial cycle, which is usually a very positive year for stocks, bonds, and crypto, and even real estate. So those of you that are frustrated with interest rates being high in real estate, I still believe that interest rates will come down, but we're just not seeing it yet. So everything is coming along. I do believe we will get lower inflation numbers in anticipation of lower energy prices as soon as we hear more news about drilling for oil in the United States. And we should then start to see interest rates trend lower, which will also be good for the stock market. If you're thinking about your finances and making some important decisions about who's going to be guiding you in those finances, consider joining the Be Wealthy and Smart VIP experience, my personal investing insight group. Members of the VIP experience join once and then have lifetime access to invest with me for years to come. It includes monthly live webinars with me with live Q&A for me to answer questions, an asset allocation model for your stock portfolio, so you know exactly what to invest in with symbols and what percentages to invest. And in addition, we offer a full crypto portfolio of cryptocurrencies to invest in, as well as private equity. So companies before they have an IPO or initial public offering. Buying them as a private business can often be a very lucrative investment if you're an accredited investor. We also have our own tech team. So we have individuals that can help you one-on-one to get you unstuck from any crypto situation you might find yourself in, whether that's setting up a wallet, transferring crypto, getting your first purchases made on exchanges, setting up limit orders. Our tech team is there to help you. We also have a private Facebook group where I interact many times a day with people and share articles, updates, market commentary, and interact with the greater VIP community. If this is something that is of interest to you, check out our limited time offer in the show notes below.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.